The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Okay, folks, Larry Pesavento sitting in for Basil Chapman, and we're having a little bit of a allergy thing today, folks, because we hit 100 degrees 3 days in a row, and the cacti are blooming, and they're coming after me, but I'm feeling good, looking good. Okay, here was our trade of the week, which was the gold. If you remember, on Friday we were looking at the sell up here at $33.65. We're now $80 lower. So you can see if we take out this low right here of the 22nd, that's going to set up a price level substantially lower. Now, this has been a perfect ABCD through here, and we rallied up and stopped exactly at the 61% retracement of the high that we made back at 35.05, and 50% of the high that we made at 34.50 or 34.60. So that's why this is called the 1-3-5 pattern. As you can see, it has really nice time symmetry that lines up too. That makes it absolutely a perfect type pattern. You don't always see them. When you do, that's the one you want to act on. Now, we've had a couple questions here from Basil's folks. The first one I want to bring to your attention is Tesla. Tesla has a bearish chart pattern, folks. I don't know what it's doing today, but we're going to get it up here and take a quick look at it. But as we saw on Friday, that it was bearish with a lot of resistance. Oh, by golly, it's back up there again. So this is at a real critical level. Here's where we are. There was our high on Friday. That was 31.51. We're trading at 31.51 right now. And that's a ABCD pattern. It's gapped up quite a bit. We gapped up a good $10-15. So this is where I'd be selling it right here with a stop at 359 is what I would be doing if I were doing the Tesla stock. Okay, now you can see a longer term pattern here. It's been going down since just a little before Christmas from 490, dropped in half to 210, and now we rallied back 50%. Is what we're looking at here in Tesla here this morning. All right, now the Dow has been very strong here today. I don't know which of the stocks is moving right now, but here I'll bring this up on a little smaller time scale for you to look, because we're approaching. There's the Dow Jones for today. You'll see here we were trading at 42.80. We dropped 300 points, and now we rallied back up to the 382 right here now at 420.69. Anything above here would say we're probably going to go a great deal higher. Now, the market that's getting a lot of news finally, positive news, is the Treasury bond market, and why, I'm not sure, but let's just take a look at this now. I apologize for my voice, folks. I have no control over that, and the longer I talk, the worse it gets. Anyway, this is the Treasury bond over the last few days. You see, we've had a nice rally here. We've rallied almost three handles up to 112.26. We took out the previous high, and now we've really done very little here right now. I would be selling this ABC. We'll do the hourly so we can see it a lot better here. There's where I'd be selling it right up here at 113.40. That's a ABCD in a bear market. And if you believe anything that Gardley did, you'd say that's the one thing you want to do is sell the first ABCD that you get in a bear market. And this has been a bear market. You can see there was your first ABCD right here. Let's draw that in so you folks can see it. I did a special today on the J.C. Parrott's All-Star Charts. I did a half-hour segment. They were asking me questions about how I got started doing this business and stuff like that. And anyway, these guys are, what do you call it? They're like the SOS bandits. They're all into stocks and stuff that I don't know much about, but the patterns are the same in stocks. And the question they asked me is, why do I not look at fundamentals? And I said, well, they don't mean anything. Of course, no one believed me, but that's the way it goes. Anyway, this is what we're watching here, is get a sell up into this area right here in the Treasury bond market. That market has a real problem, folks. Let's look at this on the daily, you'll see we did come down to this bottom right here. We look at, you see the quality of this rally, how meager it is. I mean, this is really, this looks like bonds really want to go down to 107, 106. Yeah, there's 107. See, this all we're having is a little tiny 3-day rally. That's all this is, and it's really meager. So I don't really see bonds going very far to the upside. There are people that are bullish. I happen to not be one of them, but that's neither here nor there, as they say in the trade. Now, the big surprise, if there was one over the weekend, hold on. Oh my goodness, I'm very sorry here, but I've got to. Oh my goodness, my throat has gone ballistic, folks. So bear with me here. We'll get rid of this one here in the bonds, and I want to talk here about the U.S. dollar, because the dollar has held some major support here. Now you can see the sell-off in the euro here this morning. It's not much, but it's down a little more than a point. But remember this on the daily chart. We were setting right up here at the 61% retracement, and it's not violated. It's just, this is the 10th day up. We're right up to the exact 61% retracement. Now, if we look at the dollar index, which is 53% in the euro, you're going to see that the dollar went down to the 78% level. And I'll get this up here in just a second here, DXY, and hopefully we'll get the dollar up. There it is right now. And you see there was it tried to hit the 786 here this morning. The euro was trying to make the 618. The dollar was trying to make the 786. That's why the dollar is so strong right now, is because the euro being 53%, okay? There were other ones that are in there, like the Australian dollar, the Japanese yen, and the Canadian dollar are also very, very important. But when you have 53% of it, so if you watch the euro, you can trade that. So when this is going up, the euro's going down, and that's why it was a sale up here this morning in that 114 level. So that's what we're paying attention to here as we look at this morning. Now, I want to okay, we're getting a nice move here in Tesla. I just hear the beepers going off here. So we've gone above that number. But like I said, if I were doing this, my stop I'd be selling at that 151.17 level. My stop would be 149. And we're having a lot of movement this morning, and that's why we're getting a lot of volatility, especially early in the morning. Now, let's take a quick look here, since we're watching several of these currencies at once. I want to get this up here to, oh my goodness. Oh my, hold on just a second, folks. I'm struggling here for my throat, and I can't do much about it. So hold on one second. I want to show you the Japanese yen, because that's a big mover. It's like 15% of the dollar index. And we'll get this up here and show you that we're having a pretty big move in that today. Just get this daily up so we can see it. And you can see it's doing the same thing. It went down, made a little bit lower low this morning, and now the dollar has started to rally. And that, look at, we're down 10 days in a row, and now we're having a snapback rally. That's just a normal thing, okay? So let's remind ourselves of that as we're watching these things here unfold during the day. Now, hold on with me one second, and I will check the old clock on the wall here, because I have to get up and running to see where we are. And we'll be back in just a few minutes, folks, so stay with us.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out, like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Okay, folks, Larry Pesavento setting in for Basil Chapman. That was my way of turning on the mute button so I don't get an echo. Now you can see here we've got an update in Apple, and it's not very much. I mean, the president is beating him to death about moving the stuff over to India, from what I've heard from somebody else today. But that's pretty much it. That's not doing very much, but it's matching down to this low. But it used to be the leader of the pack, folks. I know they've relegated it to a second-class citizen right now. Okay. Now, we had some other stocks that we were watching, which was, I'm going to go through some of them because I know most of these folks listening are stock people. But let's take a look here at NVIDIA, because it had been the leader of the pack for quite a while. And you can see we've rallied back a great deal from our high that we made back at 150. Okay, that was way back in January. You can see we had a really big move here since the 7th. We've gone, we've almost got up 60% here since then. We're up again today. This was when the high was made there at 155. You can see all the beautiful A, B, C, D patterns coming to the downside. Today on the all-star charts with the J.C. Parrott's and his group, they're all stock people, and they kept talking about the fundamentals that were going on in the market. And I said, and J.C. knows that I don't do anything because he's a friend of Jim Bartolioni and one of the other Top Gun pilots, and we were discussing, the fact that I really don't look at the news. I look at it afterwards to see how it reacted to it. But that's what I'm watching here, is this market looking, and it's coming back pretty strong. You can see the S&P here, just since we opened, we've rallied 30 handles in the S&P. We've already exceeded the 61, 78. It's just really gone, basically straight up here. And so that's why you've got to be really careful when you're watching these things unfold, because it gets very, very interesting when you see them doing this, real early in the morning. Okay? All right, well, let's move on up here, and we'll see what else is going on. So you can see the Dow Jones is now rallied up to the 61% retracement right here at 421. We've rallied 200 handles, and we've only been open just about 50 minutes. So that's a pretty strong rally here, early in the morning. Now, I want to go over a couple of stocks that we've talked about. I don't do stocks, but since Basil is a stock guy and there's nobody better than him at this, we want to look at some of the ones that we've been watching because people have asked me about these stocks. Apple happens to be one. Tesla we've already looked at. But we want to look at the United Healthcare because that's the one that dropped in price, by half. And we'll get it up here. UNA. What happened? Oh, here it is right here. Here's United Healthcare. See, it should be rallying strongly today. Well, it's not. Well, it was up, and now it's actually still up, but not very much at all. Oh, that's Uber. Shut the front door and say, hold on just a second, folks. Doggone it. Just a minute. Here's United Healthcare right underneath it. And, well, it's actually down on the day. You see, it's really doing very little. So that's but the Dow's up, almost 400 points. So that's a pretty big move, and it continues to be going higher still. So who knows? I really believe that I thought today was going to be a pretty substantial day to the downside because we closed yesterday, a Friday, day before a holiday, and then of course the news came out about the tariffs in the United Kingdom, and that everything goes up and it's following through. But if we close above 50, let me just give you this number here. Look at the swing that we've had so far this morning. There's last night's swing, folks, just because I was following this very closely. From the low that we made right back here, you can see the 382 pattern right here. Now watch this. This was the overnight pattern. And how does it know this in the middle of the night, right? How does it know that? But there it is, goes right there, stops exactly at the 382. Those goes up and makes a new high. We still can't take out that low, and we're back near the high again. That means if we get any higher than this, going back on an hourly chart, if we get above this level here of 59.40 or so, this means this market's going to go a whole lot higher. But look at this. We've had a tremendous rally here of 40 handles in a matter of it's been 40 minutes. So people are still out there buying like crazy. So there's no way to not step in front of it. That's the main thing that you want to be watching as you go through here. Now, I want to go through a few more stocks here that I think are important. Visa happens to be one because there's a lot of talk about people on their credit cards and stuff. Now, this is Visa. I've never traded it, but someone asked a question about it. All I'm going to do is to look at, you can see the ABCD pattern right here. There was your low on April the 7th. You can see, just draw it in. We'll draw it in right here. And you'll see their ABCD measured just about 131. It was this big down. You extend it by just a little bit. Whenever you see a big move down like this, folks, and CD leg, you have to, well, you don't have to, but in order to find that bottom, you need to make the CD leg 1.27. You see the gaps that we're having in here in these wide range bars? That means the CD leg is going to extend to the downside. And all I'm going to do now is to come up here and mark that off, and I'm going to make the CD leg 127. Not done this before, so let's see if it works. And there's where your low should come in there at 301, and there it was. Now, the same thing on the upside. If we're looking at Visa right here on the upside, see we have a gap here, surprise gap. Look, way down here, and then bang, this must have been earnings. And now we have a gap. That means that the ABCD leg, if you draw that in, AB equals CD leg, is going to extend by 1.27. So you come up and you mark this off like this, and you move it over. And you'll see that when you get to 127 on this one, we will be right at the number 367. Now that's not too hard to do, and there's no fundamentals involved, and that's one of the things we're looking at. Look at the Tesla is now 356, folks. It's jumped 4 points since we've been talking. That means these things are probably getting ready to go a whole lot higher, but we have to still early in the day. All right, now let's get over, and someone's asked a question about Wells Fargo. Oh, okay. Now, Wells Fargo's had a pretty big run here from the bottom. Let's just get up here and take a quick look at it. I hardly ever look at this stock, but there it is on a longer term basis. There again, there you see your ABCD pattern right there on April the 7th. The whole world was bottoming on April the 7th, folks. If you look at the emerging markets, Hong Kong, China, all of them were making some, along with us, we're making a major bottom there. And there's where we were. You can see we come in Fact is, here's one where you have a big gap and a down move, and yet the ABCD was still perfect. Ordinarily, you have to extend it down, but this one stopped right where it was. And then, of course, we had the big gap up, and it's up a little bit today, but, nothing to write home about as of yet, but it's still, quite a bit early in here. By the way, on my show coming up at the half hour after 1 o'clock at 1:30, Paula Webb will be our guest. Tomorrow we will have Jeff Huge, and on Thursday we will have Jim Bartolioni of Bart's Charts. He'll be our guest talking about some of the things he's looking at, and one of them happens to be Uber. He's got a really good perspective on what Uber is doing right here. Okay, now as we move this out of the way, hold on 1 second, and we'll see where we are. Just give me 1 second here to get some of these things done. And I want to get one other chart up here if we can before that, and that is United Airlines. I see that Southwest is now going to start charging for baggage. They used to be free, but now they're going to start calling for baggage. Now, I don't trade stocks, but this is a tough ABCD, folks, because it has such really strong trends. You got small ABCDs in here, but there's really not much to do.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Wow, boy. Okay, folks. Larry Pesavento for Basil Chapman today, folks. I'm going to get rid of this stock stuff. I mean, that's like putting me in a sandbox with little kids, because I don't understand stocks very much. And I don't trade them. So I really want to do the things that I do. So I'm just going to spend some time showing you what I see. I've already showed you the gold market. We were very bearish that from a technical reason. I'm still bearish the stock market, but it doesn't want to go down. That doesn't mean it can't go down, or it might still go up forever. But as I look at these charts here over the weekend, I'm just going to bring them up here to show you what I was watching. So give me 1 second here. Get the stock indices up. As we were watching this morning, you can see here on the Dow Jones, we were making, and this is the actual Dow Jones itself. We just completed the big ABCD, and this is the index itself, not the futures. We've done that. You can see went up, made the perfect ABCD after you make the correction, did exactly what it was supposed to be doing. If we looked at the E-mini S&P, we've done the same thing. We came down, we've rallied back up, we got back to 59.15. As long as we don't get above this level right here, I think this market has a bias to the downside. These following charts will probably help us. This is the E-mini on a shorter term basis. You can see here, we stopped here at the 382. We came down a little bit and we went all the way back up to here, folks. This is where we are trading right now at 59.02. Okay, so now what we're going to do is we're going to keep looking at these, and you can see here the NASDAQ, we came down, we had the big sell-off, and now it's rallied back. I don't know where it is today. We're going to look at that in just a moment, but this still looks bearish. As long as we don't close above 21,500, it still has a period to go to the downside. Here's the most bearish of all, which is the New York Stock Exchange Index. You can see the ABCD pattern right here. The extension on the CD leg is 1.27. We're up slightly today. Haven't put the figures on yet, but that's still rallying because of the rest of them. If we look at the Russell here, there's our Russell right here, backed off. Now today with the thing with the what do you call it, tariffs, things over the weekend when they were going to drop the European Union tariffs, the market looks like it's rallied quite a bit. We've got up to 2070 or 2080, I think, so far this morning here with the Russell. If we look at the S&P cash, we had this is for 10 days, and then, of course, the tariff thing came out, rallied up again, and now we're setting at this level of around 590, and this thing is still holding the same. If we look at the transportations, you see we went up to the 61% retracement and then had the big break here. That's also negative. But the two things that I've talked about before is if you look at the fear-greed index, that's at a maximum. The put-call ratio is at a maximum. And the amount of money that's being pumped into the stock market from some of these areas are also quite negative. So that's one of the main things that I want to be looking at. Okay, now, folks, I have to change venue here for just a second to take a look at the cattle market, because I haven't seen anything happening as far as beepers going off, but we had a situation in cattle that looked relatively bearish on Friday. So let's look and see how the August cattle are acting this morning. Get back in an area where I know a tiny bit about it, and you'll be able to see it right here, and it's working okay. And you'll see there's where we were. Move this over just a little bit on Friday. Well, it did it today. There you can see it made the same high today. It's already dropped 1.5 points. Let's just draw it up on a really small time frame, and you'll see there's where we were. There it is right there. There's your 61% retracement. You've dropped 3 handles, folks. That's $1,200 in cattle in a matter of a half hour. That's a pretty good move. There's your 61% retracement, and that was the ABCD. We were looking at that on Friday also. And you'll see there was your A, B leg. There's your A leg, B leg, C leg. There's your D leg right there at just about 211, and now we're trading at 208. That's a pretty big move. In fact, we opened today at 208. 210, 211, and then you can see where we are right now with the cattle. So that wouldn't be working the way we thought it would probably be working, but still a little bit. Boy, Tesla's going nuts, folks. I see it at 357. I'll be out of this. That's why I don't trade stocks. Well, anyway, you can see Tesla here is really smoking. So big gap, and everybody's buying it. So this would have been a losing trade, and you had a gap here, but you still got to do it because you don't know which ones are going to work and which ones don't. That's the big thing that you got to pay attention to. Now I've got one here that I really like. I don't know if you folks will agree with me or not, but we've made some really good money on this the last couple of weeks, and that is in our wheat market. So we're going to get up here. This is one I recommended today to buy it at 72. And oh, God, wait, this is July. That's December. Hold on one second here. December wheat. See, I was buying it at 72. It's trading at 69 right now. Hold on. I'm going to bring this up on an hourly basis to show you why. We had the ABCD. Remember, we got out of this up here, and so I was buying it right here at 72, which was the 382 retracement right here. Now we're below that here by about 4 cents. And like I said, if you're going to buy that, you're going to be in the wheat market as a farmer. Right now, you'd be out $200. But your stop has got to be right here at 58. So you've got to be stopped down below this area. This is still remember, we bought it here, we sold it there, it was a nice profit, and now we bought it back right here, and we're going to find out whether it's going to move any higher or not. Now, one thing I can do is I can bring this up and look at it on the AI program, because wheat is something that I watch because it is so heavily traded worldwide. Corn, wheat, and beans there are international markets, and you can see it's had a big down move here so far today. So let's see what the forecast is and see if we have any chance that we're going to have a pretty good rally today. Oh my goodness, look what it says right here, folks. Buy wheat right now. So that's what I'd be doing. I've already bought it up here, but I'm going to buy it. I can't buy it again. I cannot add to a losing position, but that's where a person should be buying the wheat is right now. You're going to buy July wheat because this is based on July. It's trading at 5.29, and your stop would have to be a nickel. So if you're going to buy it at 5.29, your stop is going to be down at 5.24 would be your stop. Your stop would be, let me write that in so you can see it. Since we're on the 2 shows today, we'll be able to follow this through. So we're going to put the stop in at 5.24. We bought it at 5.29. Should be bottoming right now. And if that's the case, fact is, it's really pretty good fit. If you look at this, move this over just a tiny bit, you see it's perfect. This is where you should be buying it. And I bought it 4 cents higher, but I was buying December. See, there's a difference between those two wheats. One's old crop and one's new crop. But don't forget, folks, we made that whole move right here. We were buying this at 48, and we got out of it at 88. And that's a big move. So that's what we're paying attention to right now here in this, as we're looking these things unfold here so far this morning.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Oh boy. Okay, folks, Larry Pesavento for Basil Chapman. I think we should spend just a tiny bit of time here with the U.S. dollar, folks, because it affects all of us by a great deal. We'll start off here with the Japanese yen that we've talked about just a minute ago. You can see we had a really strong rally coming off of this right here. The reason why you're down 10 days in a row here, this is the dollar is rallying against the Japanese yen. When you see a cross rate, the first one is the long side, the second one is a short side. So you're long the dollar, and we're going higher today. Okay, now, if you looked at the euro, which we've already looked at, and we're going to take a look here at the dollar index now itself, because it's the index of what everybody watches to see how the dollar is doing. That's why they call it the dollar index. And we bring this up here on the daily chart. You're going to see here that we are bouncing right off the bottom, just a few pips off the 786. Now remember, the euro had the 618, and now this had the 786. This is a big move in the dollar, folks. You can see the range here, and we're only half hour into the day or hour into the opening of the stock market. So, but this has been open all night, and you'll see here, that's what we're watching. It's got a really good chance. You're down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. Today's 11th day down. So we're due for a rally. It's very unusual when you see that many in a row. Most of them are, 3 to 5 days. But when you go past 8, you can go out to any number that you want. So this is a sign that the dollar has bottomed right in here. Now, that could be bullish gold, bearish gold. Usually when the dollar rallies, it's bearish gold. And now gold has been hit pretty hard, and it seems to be wanting to go lower. But there were a lot of reasons on the gold market. If you remember, I talked to you several times on my show about the open interest was getting worse and worse and worse in gold all the time, even though prices were going higher. The open interest was going down as prices were going up. That means it was short covering, and that's what's happened now is they're finally realizing, there's something wrong with the gold market, and now we're down well over $300 from the, quite a bit higher, over 300, we're down $500. We've dropped $500 an ounce, folks, because we broke the magical 3,000 level here today. So that means it's down $500 an ounce here in the last 5 or 6 weeks. So that tells us a major bottom or major top has been hit in the gold market. We saw this in silver also, and then also in platinum. Now, now let's get on here, and I want to show you a couple other of these cross rates because they're related to agriculturals. One of them we want to watch here is the Australian dollar. This had a very, very bullish pattern here unfolding here today. Let's see how it's looking. Well, it's backed off a little bit today. Let's get this up here. And yeah, let me just, I have to refresh this, folks. Just take a second. And this is one of my favorite ones to trade. You can see we had this big move all the way up here. And you can see here, the little pullbacks that we've had here have been very, very meager. Look, so if you get a pullback here in this Australian dollar, and let's just look at it right here. We'll be doing this on my show each day as we go through, but we'll mark it right here. And you'll see there's where we'll look to see a pullback here, about 1.5 points. That would be a really good spot here to buy this. And if that happens, this would really be even better. If that happens right here, okay, this would really be good because you have a lower left shoulder right here. You're going to have a higher right shoulder right there. And let's just see where the left shoulder and the right shoulder match up here. It might come up here really quick here. Yeah, it looks like it's going to be next week. About 2 weeks, you want to be watching. Probably if it gets that to that level, we want to watch it because there's your left shoulder. Your right shoulder could either be right here or right here. That would set up a beautiful head and shoulders pattern in the Australian dollar, and you want to be looking at to buy it. Right now, it's done nothing to make a small little patterns in here, really not doing too much. But this has been a big run up here from 59 to 65. That's when they were hammering the dollar. The Australian dollar was rallying. Now, we need to look at one other one, which is our friends to the north, which is the Canadian dollar. And this one was ready to really drop. I'll show you as we covered this here. Oh, that's this cross rate. Just a second. Hit the wrong one, folks. Bear with me here. And we'll get it up here. It's right here in the top section down here by the Canadian dollar. And get that ready. Okay. Yep, that's exactly what's been happening. Here's the Canadian dollar here. I'm going to put this up on the weekly so you can see the ramification of this. See, we've had this big break. Okay, now we've come all the way down to this level right here. So this is one of the ones I was saying. You see, we had this big break here on Friday. The market did not collapse. And that is the dollar might start having a little bit of strength. And you see it has a little bit of strength. That means long dollar, short Canadian. And if we look at this on an ABCD structure, and we're going to take a look at it right here, move it over, and we're going to draw the high that was way back here when they had that thing with the Canadian tariffs. Everything was related to tariffs. There was your ABCD pattern right here. You'd have to extend it down because of the strength of this down move right here. So that means the CD leg is going to be 127, and it should be pretty much spot on to the bottom. And there it is right there, 137.296. So that means that the dollar should be strengthening, and that's exactly what's happening here. So far today. Okay, now it covers that one. Those are the main ones. I don't do the Swiss francs anymore. Ever since they pulled that thing where they bank robbed everybody 10 years ago, when they dropped one day they devalued, the next day they revalued, and it was something like that. But it was the largest move ever in currency. So $20,000 a contract. If you were long the Swiss franc, you could have lost $20,000 a contract. If you were short, you'd have made $20,000. But you'd got to get out that day because the next day it was back up $18,000. That's how crazy it was. And since that time, I haven't touched it. Don't trust them, so don't need to worry about it. Even if you had a stop in, folks, it wouldn't make any difference because there was no liquidity at that time. And that's one of the things that you have to worry about in these markets is illiquidity. And that's one of the things that's very, very important. Okay, now let's take a look over here and let me clean these out just a little bit. And hold on, I want to see where we are. Just a second here. It'll only take me just a very, very short second to get this thing done here. And we'll still be doing, stocks are still going up. I believe, have we taken out the highs? We might have. I'll have to do this in a little bit because I can do this quickly. Just bear with me, folks, here. I'll just do the cascade, and then I can bring up the S&P chart, and we can see where we are. It's right here. We're back to those highs. I think we did take that. Not yet. They're almost at that level right now, so that's pretty much what we're watching here this morning. Okay, So I think we have to take a little break right about now. And then we'll be back in we got a whole minute to go. Let's bring up another stock to take a look at. Someone did ask me about Disney, and I haven't looked at that stock since, a long time ago. But there it is right now. We'll bring that up. And I think there's a problem on my data, folks, because this is not right. This thing right here, that did not happen. That would have been in the news, and I don't believe that's right. I've refreshed it a couple times, and there it's fixed. Okay, there's Disney. We'll be right back, boys and girls.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, Larry Pesavento sending in for Basil Chapman. I want to stand corrected. I said the gold had dropped $500 from its high, folks. It's only dropped $300. We were fit $3,500 down to 33, so it's $200 and some dollars down. From that level right here, it certainly did. That's $400 and some dollars, but just on this move right here so far, it's only down $90 from where the sale was up here, $33.65, which was the 61% retracement off the high and 50% off the secondary high, making this a 1, 3, 5, 5 pattern. That's what we were paying attention to here today. Now, one of the things that we want to be watching when we come on to my show is, remember, we bought July wheat at 4.29 with a stop at 4.24. We're risking a nickel. So we're going to look at that thing now. The cattle happened too fast because it had already moved before I got onto the show here. We couldn't use that. But if you looked at the videos and the things that I've been talking about, is that first ABCD, and it was right at the exact 618, and that was almost exactly where we sold it originally, which was 211. Of course, it went higher and stopped us out on that trade. We missed that whole thing, but now you've gotten it all back, and you're up a big move today in the cattle if you were able to get into that. So that's one of the reasons why we watch these separately, because you just don't know which ones are going to work and which ones aren't. Okay, so that's the key to it. It's not how much money you make; it's how much money you don't lose. That's the key to everything that you do when you're doing pattern recognition swing trading. Also, I want to remind you that Paula Webb will be my guest at the half hour. We'll see you all at 1 o'clock, and may God bless.